Hey, good morning, everyone. This is Kelly Nehls with Remax Alliance here with Scott Granger with Nexa Mortgage.
Morning, Kelly. Morning, everybody. Here to just talk about the current situation in the market and how things are going for buyers and sellers. But I want to ask Kelly, what are you seeing right now as hurdles in the buyer's side?
Yeah, most people are just a little nervous that interest rates have gone up, and so a lot of people are thinking they want to wait at the moment, see if they come down, and just wanted to get your opinion on that and see what Nexa can do.
Yeah, well, the interest rates are going up and down. However, rent is 100% interest every day, every
Right.
month. There are some programs out there for 2-to-1 or 3-to-1 rate buy downs. So, what I like to suggest to buyers agents are when you see a listing that's come down 10K to 20K, go back to that seller and that listing agent to see if a purchase price, the original purchase price, would be a good offer, and if the seller would like to give a concession to the buyer. Because with that 10 or 20K, you can get the interest rate to come down for 3 years,
Wow.
2 years, or 1 year by a point each year. So that ends up giving the buyer a win for saving some money over those couple years. The seller is actually going to net a little bit more with that higher purchase price, and then the comps in the community actually stay up for a future listing. So that's a win for everyone involved
Absolutely, and
there.
that sounds like a great option.
Yeah. Some other programs out there for buyers who might have decent credit scores and stable jobs, but just low on cash reserves, are down payment assistance programs. Colorado Housing and Finance Authority offers one for 3.5 or 4% of a silent second.
Wow.
For that's down payment only, and if there's any money left over, it can be used for closing.
Mm-hmm.
There are also 2 or 3 other national down payment assistance programs that are available that offer.
These are the ones that just came out in the last couple months.
Yeah, over the last 2-3 months, they've
Okay.
come out, and CHFA is a great program, and sometimes everyone doesn't fit into that program.
Sure.
So these 2 or 3 other programs offer that same down payment assistance to our customers.
Okay.
And if it's they can still be used with seller concessions. So if you have a seller that wants to give
Talking
concessions,
point.
they can also then pay your closing costs. So you can come to the table and get a house with a little bit in your pocket and still have a nice, a nice home and a decent payment that you can afford.
See, there are options out there.
There
Great
are.
options.
Yes. Thank you.
Great.
What about your investors? How have you heard your investors wanting to buy in this market right
Yeah,
now?
similar to most buyers. I think investors were a little teased for a while with lower interest rates, so they were able to make pretty big profits. So they're wanting to wait a little bit as well, or think that they can't make as great of a profit as they have been.
Sure. Well, interest rates aren't going back to threes anytime soon, or probably even fours. But if there are people out there that are 1099, they don't have a lot showing on their tax returns, there are investor options called bank statement loans. They just allow for 6, 12, or 24 months of bank statements to be shown and a decent credit score, and that buyer could qualify for a home that way.
Okay.
It's also good for investors who have more than 10 properties. So if you want to grow your portfolio during this downturn when there's less competition in the market, you can get into a home doing that, and depending on what your portfolio strategy is, you can get into that.
Right. And you were saying earlier that there's a misconception that you have to stop at 10 properties.
Correct. Conventional conforming loans cap you at 10 properties. However, non-conforming loans will allow you, 20 more. It just really depends on what your portfolio and your financial status is. There are loan programs called debt service coverage ratio loans, also known as vacation loans or landlord loans, where the actual property helps you qualify for the mortgage. So it's basically just dividing the expected mortgage, taxes and insurance included, by what the expected rent would be, or actually vice versa.
Right, yeah.
And if that ratio is within some of the lender's qualifying guidelines, then a decent credit score and cash reserves in the bank for 6 months to 12 months will allow you to qualify for that loan.
Amazing. Yeah.
Yeah, there's tons of options out there. There's conforming loans that allow 30 and 40-year fixed terms. In the first 10 years is interest only. So you can get into a home, and the first 10 years you're only paying the interest off. And then after, it's a fully amortized loan with your principal, insurance, and taxes. However, you can refinance within those 10 years if the market turns back in your favor, or you sell. So you get a 10-year window to kind of decide where you're going with that property, whether it's primary or investment.
Oh my gosh, that sounds like a fantastic option.
Yeah, it's a powerful tool. All those really are for what kind of buyer walks in your door or walks in anyone's door.
Sure.
So, yeah.
Are there any other programs that you want to touch on? Well, to set Nexa apart, or
Well, as far as Nexa, we have over 180 different lending partners. So I've got commercial loan availability. I can do land and farms, agricultural loans as well. There are plenty of other programs out there. So give me a call and let's see what I can do to help you out.
Awesome. Thank you so much, Scott. It's nice talking to you.
All right, you too.